What if the story you've been told about property investing is just wrong? For years, the old rule was buy houses for growth and apartments for cash flow. But in Perth, that rule is officially broken. Last year, while the median house price in Perth saw an incredible growth amount of 18.4%, the median unit price went absolutely ballistic, shooting up over 20%. That's not a mistake. Units are now outpacing houses for growth. The single fact is helping people quietly add tens and even hundreds of thousands to their bottom lines. So I'm seeing this on the trenches at the front lines, if you like, and actually seeing this happening. So forget what you think you know, because today I'm pulling back the curtain on my exact method for finding Perth properties that deliver both massive growth and strong cash flow. And I've been investing in the Perth property market for 30 years. So for years, the choice was a painful one. Do you want your property to grow in value, or do you want it to put money in your pocket each month? Which was the age-old argument. In Perth, that choice is now a myth. The idea of choosing between growth or cash flow is just dead. So what changed? In a word, affordability. As houses became more expensive, smart buyers and investors flooded the unit market and have dramatically cranked up competition, and they're pushing prices skyward. This surge in demand means for the first time, units aren't just cash flow machines, they're a powerful engine for capital growth. The numbers don't lie. While houses have traditionally been seen as the safer bet for capital gains, the tables have well and truly turned. We're now seeing certain types of units experiencing explosive growth that leaves many houses in the dust. This isn't a fluke, it's a fundamental market shift. So look, the middle class as we know it is disappearing. As my mentor told me it would around about 30 years ago. Affordability will be the biggest driver for more and more people for years to come. Apartments will fill an increasingly important niche in the Perth property market. They create affordable properties in very high quality locations. While the growth story is new and exciting, let's not forget that units remain the undisputed kings of cash flow. Right now, the gap between the rental yield for a house versus a unit in Perth is huge. We're talking about a difference that can translate directly into hundreds of extra dollars in your bank account every single month. Units are consistently outperforming houses on rental yield. This is all supercharged by a rental market that is tighter than a drum. Perth's vacancy rate has been hovering at historic lows, as we all know. With so few properties available, tenants are competing fiercely, which keeps rents at record highs and your investment incredibly secure. But when the dust does settle, it's important that you still have a great asset that's delivering consistently high cash flow returns. So how do I find these unicorn properties? Well, they're in plain sight. It's a simple two-part filter. Firstly, location is non-negotiable. I only focus on properties near essential infrastructure, train stations, major employment hubs, lifestyle amenities like cafes and shops. These are the features that guarantee strong rental demand and long-term appreciation, because people will always pay a premium for convenience. Convenience is the new currency. Second, I apply my Easy Care filter, which I focus almost exclusively on new property. The reason is simple. They put your cash flow on steroids by slashing your holding costs. Newer properties have minimal maintenance and repair expenses, which can absolutely destroy your returns on an older building. I had a lovely older style apartment a long time ago with wooden floors, high ceilings, the whole thing. And when we found out that whiteheads had eaten a large piece of the building out, it cost me $20,000. So new also comes with modern, energy efficient features that attract high quality tenants. Most importantly, the big ticket maintenance is handled by a strata or body corporate, making the investment genuinely passive. You can also claim as a tax benefit all the fixtures and fittings of new property, which adds thousands to your bottom line and of course increases your cash flow. It's a strategic business decision to de-risk your investment and maximize your return. Look, this strategy is pretty simple, but it takes discipline. It means ignoring the media hype and, more importantly, what your neighbor, brother, or friend tells you is a good investment, and focusing on what the numbers are really telling us. If you want a hand applying this exact framework to your own high growth, high cash flow property in Perth, I've opened up a few spots this week for a chat with me. You can just give me a call. You can message me, phone consult in the details below, but this is just for the first 5 people. So stop forcing yourself to choose between capital growth and cash flow. In the current Perth market, you can absolutely and should demand both. The data is clear. Units are delivering price growth and far superior rental yields compared to houses. Forecasts are calling for another potential 15 to 20% price jump for units in 2026, driven by a chronic housing shortage and strong population growth, as I've mentioned in other videos. The opportunity is right there, sitting in new easy care units located in amenity-rich suburbs. That's the playbook. Now it's your turn to use it.